I mean, there is no precedent for this. The sky is the limit. It's, how much are people willing to pay for alternative supplies? If that's supplies from other countries or supplies that might be made available from a coordinated stock draw. So, we got very close to $120 a barrel this morning in early trading. Things have settled back a little bit since then, which is not a surprise. But, there comes a point where we've already got Iraq shutting in significant amounts of production. I think about 3 million barrels a day. We're talking also about Kuwait possibly cutting production. And, based on what we know about storage capacity in Saudi Arabia, there's the possibility in the next couple of weeks or 3 weeks or so that Saudi Arabia may have to start cutting its actual wellhead production because it's running out of storage. At that point, if we're still in a situation where this war is going on and people are shooting at each other, then, the sky's the limit. We cannot know because we have never been here before.
I take that point, Neil. We haven't been quite at this point before, but we have seen disruptions to the oil supply. We've seen energy price shocks. How can the world position itself? Is there any way it can position itself to withstand such shocks in future without seeing the sort of impact we're seeing?
Well, a shock, and again, I keep coming back to this point, a shock on this scale, getting close to 20 million barrels a day of crude oil and products coming through the Strait of Hormuz, all of this liquefied natural gas coming from Qatar, which is one of the world's biggest exporters of LNG. But we've had shocks before. Yes, you're absolutely right. We can think about 73, 74, the Iranian Revolution in 1979, Gulf War 1990, invasion of Iraq 2003. There's a whole list of various disruptions, the Russian invasion of Ukraine. But in each of those cases, the actual physical disruption to the oil market, which was not inconsiderable, of course, because oil prices soared. We saw recessions of various lengths in the wake of those soaring prices. We have not yet seen the complete closure of the Strait of Hormuz for any, well, in fact, we've never seen a closure of the Strait of Hormuz, let alone for any significant period of time.
Neil, the other thing that OPEC has always been aware of, and for you and I spending many, many days in Vienna and elsewhere, is that there will be demand destruction at certain levels as well. And that is a great concern for them because, of course, it creates violence to the downside when this conflict is over, as well as violence that we're seeing on the price to the upside now as well. We don't need to stay here for too much longer for that demand destruction to start coming in, do we?
Oh, no. I mean, in the not too distant future, in fact, it's probably already happening. I think I may have heard on your show earlier this morning about heating oil prices. I certainly heard it somewhere in the UK are soaring. And we will start to see gasoline prices at the pump start to increase dramatically, because oil is everywhere. And this is going to have an impact on the economy. It will hit consumers in the pocket. And of course, consumers are also voters. The point is that discretionary use of oil, particularly things like leisure driving, that will be hit if, for example, prices remain at elevated levels. It will have a big impact on the global aviation industry because eventually the airlines will pass through the higher cost of fuel to their passengers. So demand is going to be suppressed, destroyed, if you want to use that phrase. And that's interesting because even before this war started, the outlook for oil demand growth in 2026 was fairly tepid, about 1 million barrels a day, give or take, depending on whose estimates you look at. So we were in a situation where oil demand was not exactly going through the roof in 2026. If these high prices persist, it is inevitable that the assessments of oil demand growth during 2026 in all markets around the world, because don't forget, oil is used in every single country in the world, various products, various applications, and if it costs more, where there is the ability to cut back on the usage of oil and oil products, that option will be taken. So yes, our friends in OPEC, as you and I remember very well, they will be concerned at the impact on oil demand of high prices.